Hey traders, 10:15 here, 21st of October. My name is Marco from Trade and Train. Just going to take a look at the Forex markets and just give you a quick overview of where we're looking at things this week. So primarily we always like to start with the dollar index. Now what we can see here, if I just zoom out a little bit, we're just looking for our impulse and corrective patterns. You can see through here that the dollar index has been operating in simple terms is an upward channel, so it's respecting the upper trend line, the lower trend line, and then just recently we've seen this impulse movement to the upside where we got commitment of traders, short signal. This market has then created a corrective movement, which is a pullback. We've broken through this ascending trend line here, short-term trend line, and we're now coming in close into support. So we'll be expecting demand, i.e. buyers, to come back into the market relatively soon for the dollar. A couple of ways we can look at trading this, or looking for where the turn is likely to happen. If it does, will be again similar thing, just looking for these counter trend lines, looking for the market to break and move above that white line I've just drawn in. Alternatively, we can watch the smaller time frames and look for a change in cyclical pattern. You'll see last night the market gapped up on the Sunday open. We went sideways throughout the night. We've had a little pullback into previous lows, and then dollar buyers are, well, I wouldn't say they're coming into the market, but we've seen the market pause at 97.14. So what does this mean for traders? Essentially, we'll be looking at the euro, because that's the closest correlated market to the dollar index, along with the Swissy, just that is inverted, so it means it looks exactly the same, but it's just a mirror image. So you can see here, there's the short-term trend line, the euro's broken through it. Now what we can watch for is a pullback in towards the 1.1070 for potential long opportunities up towards 1.13. One of our main markets to watch has been the Kiwi. We've been buying it from the lows, and now we're running up in close into where we think this market's potentially about to have. It could be a major pause, it could be the start of another correction back down towards 63.30, or we could see the market break through. In terms of commitment of traders, we're not seeing that shift into a continued impulse movement to the upside. We're still seeing the commercials holding long contracts in this market and slightly increasing, so we do expect a little bit more upside on Kiwi, and that's going to be respected across all Kiwi markets. Best one to trade it against would be the weaker markets, so I'd be looking at the dollar, I'd be looking at Japanese yen, because those safe havens have been selling off, although you've got to appreciate that those markets are coming into some sort of structure points right now. Moving across to Japanese yen, if we just have a look, so this is where we can see resistance or supply. We see the market coming towards the 109s, market sell off. We see the market penetrate and break through and then sell off, and we're now approaching this same level again. We've tested it, we've sold off. We're seeing a little influx of buyers come in early Monday morning through Asian session and coming into London. The real test will be what happens as US opens. Will we continue the selling of safe havens and risk on, so to speak, or are we going to see the safe havens currency markets start to gain some traction, and will we break through this sort of floor of 108.20s, and if so, then expect to see a further decline down towards 107s. A couple of markets that are of interest, dollar CAD. Let me just remove all drawings. So if I just jump out to the weekly, what we've seen here, we've seen a break of our short-term trend line, or I should say long-term trend line. We've got some clear touches here on the weekly. We broke through major support here, which is, I wouldn't really call it a double top, but you can see it's a failed high here. Here's a low, and the market's now broken through those. If we then drop down to the daily chart, sorry, wrong chart, you can see we've got a solid close below here on Friday. We've now exceeded a lower low, so we're pushing down. I'll be looking for this market to come back and test 131.55 and maybe even 131.95. So I'm looking for the market to pop back into either here or here. So we'll be looking to see the market push back up, and at that point we'll look to try and take advantage of any sort of potential selling opportunity in this market back down towards 130.25. So that's dollar CAD, dollar Swissy. This one is very similar. Let's just sort these. So we've seen a clear break and close below. So this is the inverted chart to the euro we were just looking at, and we're just going to look for the market now to pull back into this 99.30, 99.20 area. So we're looking for buyers to come in here, so some dollar buyers, create that lower high here on dollar Swiss, and then we can trade that hopefully back down towards 97, should we get that move back up into this area here. So I think that's it in terms of the currency. Oh, one more, sorry, I want to have a look at Aussie dollar. So Aussie dollar has now approached 68.80. We're very close to this 6,900. You can see how the market had this incredible bull run, and it just went 1, 2, 3, 4, 5, pretty much 7 straight days from 66.70 straight up into 68.80, 68.90. And it's done something very similar over this little short period here. We've had momentum here for the Aussie dollar, which will be interesting to see what happens over the course of today, tomorrow. Will we actually see the market stall and stagnate here, or are we going to see it break through and come back and test this trend line here, which could give us another reversal opportunity short term to then continue this market movement north. Last but not least, we'll come over to the Dow. So obviously this has been a major driver for precious metals. Why? Because the phase 1 deal, trade wars with China. You know, the problem is if you actually try and get sucked in and listen to all the news that's coming out regarding what's happening, you're gonna just end up getting lost. You know, trade what you see. The problem, we always hear these deals are going fantastically well, but nothing's been signed. There's no agreement. It's speculation. All we get is what we hear in the press. So trade what you see. Do you see the market rejecting levels? Do you see buyers coming in? Do you see sellers coming in? Do you see a turn in cyclical pattern? You know, use the key technical analysis that you understand. And if you don't see any of that, leave it alone. The market is heavily, I would call it heavily manipulated. So I think if anything, you want to be looking at buying on dips to key levels. Trying to sell it in these areas, yes, you might get a home run when the market sells off aggressively, but as fast as it sells off, it rebounds. So, you know, I think the world and its and everyone has been looking for shorts and global recessions. Yes, we're hearing about China slowing down, but is that to do with trade wars? More than likely, and a growth of 5.8% is for GDP is pretty astronomical, considering it's not exactly what I would call a third world country. You know, the type of numbers that they generate isn't heard of in a Western world. So it's incredible that they are getting those kind of numbers. You know, you look at what UK are doing GDP, you look at what US are doing, you know, anything above 2 and around 2% is pretty good. The US, I think, were 2.7, 2.8. UK's forecasted about 1.8, 1.9. These numbers, I may be a little bit out on the numbers, but this is just from reading. So for China to come in at 5.8%, which is triple those digits, and they're saying the world's coming into a global slowdown from China. Is it just that China's becoming more like a developed country now, where those kind of GDP rates of growth aren't really sustainable? But time will tell. I'm a technical trader. I do pay attention to fundamentals, although I just believe that fundamentals will get you to your target or to your stop loss quicker. Any questions you have about the charts that we've brought up, or any charts you would like us to have a look at over the coming days, weeks, months, just drop me an email into mark@tradeandtrain.com. If you would like to attend one of our free workshops or come to one of our 2-day trading events courses, again, drop me an email to mark@tradeandtrain.com. Just focusing here on what we've seen is we've seen this push up into the short-term trend line. You can see that the highs are getting lower, the lows are getting higher, so we're getting a condensed picture here. Obviously this is a lot to do with uncertainty coming out of trade wars, but if we look at this, impulse, 2 inside days, bearish candle, break of the bearish candle, and we should potentially see the Dow drop towards 26.2. These lows in here and these wicks would be something to be concerned about, because this shows where buyers came in aggressively. So if we break these, then expect the market to come down to 25,400. That's for pretty much certain guarantee. If we break these, then there'll be a lot of stops taken out, and expect to see the market decline that bit further. Alright guys, have a great trading week. We'll give you a little update sort of Wednesday, midweek, just to see what's going on. Okay, bye bye.